November 14th, 2025, Crypto Market Update. Crypto Crash Alert. What the BTC dump means for your portfolio. Hey everyone, welcome back. We're diving into the heavy pressure the crypto market faced on November 14th, 2025. The volatility we've been tracking for months, it deepened today, leading to a major, painful sell-off across the board. Let's break down the current state, what caused it, and most importantly, what happens next. 1. The Bitcoin BTC meltdown. The biggest story today, hands down, was the sharp decline in Bitcoin's price. Price dive, Bitcoin absolutely plummeted, falling below the $95,000 mark and hitting a grim low near $94,300. That's the lowest price we've seen in almost 6 months, which is a major concern. Sentiment. This drop has utterly crushed investor confidence. Check the Crypto Fear and Greed Index. It's deep in extreme fear territory, around 22, the lowest since March. People are just incredibly cautious right now. The damage? Bitcoin's value sank about 8% in a single day, and is now down over 24% from its recent peak of $126,200. Ouch! Liquidations? The pain was real. Data shows over 1.24 billion USD in long positions were liquidated in just 24 hours. That tells you everything you need to know about the intense selling pressure we saw. 2. The institutional exodus, why the ETFs are key. One of the main triggers for this crash wasn't retail fear, it was institutional selling, highlighted by massive outflows from the spot Bitcoin ETFs. Record ETF outflows. We're talking serious money here. On November 14th, the spot Bitcoin ETFs saw a net outflow of around 870 million USD. That's the second largest single-day outflow ever recorded. The confidence crisis. When you see funds like BlackRock, IBIT, and Fidelity, FBTC, pulling out this much capital, it clearly signals that institutional players are de-risking. They're getting worried about market stability. Context. These ETFs have been a huge success since January 2024, pulling in over $36 billion. But an outflow this massive has a profound psychological impact. Quick institutional news. We also saw significant whale selling, those big market players trimming their Bitcoin stacks, which definitely fueled the fire. On the flip side, Michael Saylor's MicroStrategy reaffirmed its commitment to keep buying, which is a nice nod to the long-term HODL crowd. 4. Altcoins and dominance. What's happening under the hood? Bitcoin's drop didn't spare the rest of the market. The altcoins were hit hard too. Ethereum, ETH, the second largest crypto, Ethereum dropped about 6.7%, hovering near $3,200. We even saw lows touch $3,078. Other majors took a beating. Solana, SOL, was down about 8.6%, and XRP fell nearly 7.8%. BTC dominance, BTC.D. Normally, dominance spikes when BTC falls, because people ditch riskier altcoins. Here's the twist. Since altcoins fell so hard too, coupled with Bitcoin's weakness below 100,000, the dominance picture is murky. The good news is, some big-cap altcoins, particularly Ethereum, are showing signs of whale accumulation, which is helping to slow down a massive spike in BTC.D. 4. Macro and regulatory tailwinds. Don't forget the bigger picture. Global events always play a role. The Fed and liquidity. Macro factors like the Fed's interest rates and the announced end of quantitative tightening in December are absolutely pressuring the market. A lot of people are hoping that post-December 1st, global liquidity will improve, creating a positive catalyst for all risk assets, including crypto. China stimulus. China injected $50 billion to boost its economy. If the U.S. or other major economies follow with similar easing signals, that could be a strong risk-on catalyst for the entire crypto and stock market. Regulatory positive. On a strong long-term note, Taiwan is reportedly moving toward becoming the first Southeast Asian country to hold Bitcoin as a strategic reserve. That's a huge positive for Bitcoin's global credibility. 5. The road ahead. What to expect next. The current environment of extreme fear and the break below $95,000 makes the next couple of weeks absolutely critical. A. Short-term action. Crucial support. Analysts are focused on a strong support zone between $94,000 and $93,700. If Bitcoin can't hold that, the next major support level could be all the way down at $85,000, so watch this zone closely. The $100,000 hurdle. To turn things around, we need a fast daily or weekly close above $100,000. If we get a weekly close below $99,000, though, that could signal a new extended bearish trend. Bounce potential. The good news is we're heavily oversold. Because the RSI is weak, some experts think a short-term bounce or even a short squeeze could happen at any moment. B. Long-term outlook. Look, despite this painful correction, many established analysts are keeping their long-term targets. Firms like Standard Chartered still project a possible range of $175,000 to $250,000 USD for 2025, based on the 2024 halving and continued institutional adoption. Recovery path. Most experts view this as temporary weakness, likely establishing a strong base near the $100,000 level. If we break past resistance at $114,000 and $116,000, we could see a powerful rally towards $120,000. Altcoin leaders. For Ethereum, reclaiming 3,600 opens the door to 5,000. Keep an eye on AI-driven crypto protocols, the DeFi space, and specific meme coins. They're poised to play a major role in the next big bull run. Quick takeaway. November 14th, 2025 was undoubtedly a stressful day. Bitcoin dipped below $95,000, mainly driven by record ETF outflows and bigger economic worries. We're in extreme fear, but holding that $94,000 support and seeing ETF outflows slow down are absolutely vital next week. The long-term outlook remains bullish, but investors definitely need to stay cautious in the short term. What other specific cryptocurrency or market aspects should we look at next?